Here's your stock market review for today. Stocks actually sold off to start the year. Not exactly a strong sign, but a lot of people, including myself, have been saying they're overbought. I do have some information, some data points. What I did over the holiday break was I updated all the stocks that I follow in all of the sectors and ETFs, their future 2024 earnings per share projections. Doing that, I have a pretty good idea as to the value of, say, the S&P 500, NASDAQ, and a bunch of the ETFs. Stocks are still a little overvalued at this point. We do have a big data point coming in on Friday, non-farm payrolls. This could really drive the market. Most of us are expecting a benign number. Benign actually isn't good. Let's jump in. I'll show you some charts. If you are just finding my channel for the first time, thanks so much. This is a breakaway channel. Just so you know, I'm an economist. I evaluate the economy first and foremost, and I ask the question, what's going to happen in the stock market based on economic indicators? This stock market itself is an indicator of how well the economy is doing. Given that, we're looking at non-farm payrolls right here. The past few months have been a bit benign. We should start seeing some moves in non-farm payrolls closer to zero, maybe even going negative throughout the first portion of this year. But right now we're in the holiday season and a lot of people still have their jobs. So we get this indicator on Friday. This will really judge what's going to happen with bond yields. Bonds have been a little sticky. They did pop up a little bit higher. Here's another thing that I'm looking at. This is continuing claims and percentage thereof of the entire individuals who are in the working pool. So it's kind of a secondary unemployment rate. And as you can see, both of these kind of flatline. We did see some moves higher. Certainly a lot of moves higher since 2022. Roughly, it looks like the bottom there is in September of last year. So we've gone about 15 months where we've seen some increases. But these numbers are soft. Really soft comparatively. Given this, Thursday's number, the continuing claims and initial claims, if we start seeing a bunch of layoffs because of the holiday season, even though these are going to be seasonally adjusted, this could again give us an idea as to what's going to happen moving forward. Here's a look at the S&P 500 this morning. Sold off, kind of kept going. Did get a good bounce towards the end of the day, only down about 5.6% or 0.56%, about a 0.5%. So that's not really that much. Especially when you look at, there's something like this was a record number of weeks increasing. Stocks, generally speaking, are a bit overvalued. The S&P 500, let me show you this chart right here. This is the S&P 500, and of course we're only looking at about, 25 of these stocks. Look at the bottom right corner, 4.998%. What I did, as I mentioned, I look at future earnings per share, and I broke these down. You can see a couple of these. The next 4 quarters, total future earnings per share over the next 4 quarters, add them up, divided over top the current price, you get the yield. That's that last column over in this side there. That yield, S&P 500, 5%. Meaning if you bought the S&P 500 today, your yield, all else equals, big caveat, big asterisk right there, would yield you 5%. Given that there's still a lot of upside. The NASDAQ, 3.5%. So the NASDAQ traditionally overvalued relative to the broader stock market. The broader stock market, the S&P 500, buy on the dips, basically. But I've not made any trades yet for this year. I probably am going to wait till Friday to see how things kind of tee off with non-farm payrolls. That's a big indicator. We did get personal incomes and personal expenditures just prior to the holiday, and that was really indicative of how the consumer is laying out. Nonetheless, nearly 5% for the S&P 500 on a yield. That's huge. Compared to the NASDAQ, it outperforms. Will the S&P 500 outperform the NASDAQ? It rarely does, but sometimes it does. Volatility index, even though we lost about 0.5%, there was the market moved a little bit lower earlier, but then it rallied towards the end. Even though we did see a kind of a pop towards the end, volatility index really did not do a whole lot. Volatility index did kind of move back downward. Look through September through October into November. You can see how volatility popped much higher, then eased right back down. Nothing really substantial occurred today. I think a lot of people just took some money off the table. Again, it was like 0.56 on the S&P 500 for the loss for the day. That's very small comparatively. Treasury yields kind of moving higher. What's going to happen on Friday? We'll find out on Friday, but I'm looking for Thursday as well. I want to see continuing claims and what's going on there. U.S. dollar index popped up a little bit higher because interest rates are moving a little bit higher. The yield differential. Will the 10-year yield or treasury yields in general move higher? We're going to find out with more information. When it comes to non-farm payrolls, for me, too small isn't enough. Too much is too much. There's a sweet spot that the Federal Reserve needs to hit with interest rate increases, and I never believe that the Federal Reserve ever gets it right the first time around. They will have to adjust. If they have to lower interest rates, are they going to be in a big hurry? That would be bad news for the stock market because a lot of people would become unemployed and revenues would drop. Then, of course, that 4.99% future yield would have to be adjusted downward. Oil kind of moved lower over the past few days. It looks like all the controversy out in the Middle East, we'll call it that, probably won't spill over. There are a lot of people believe that there's going to be some kind of conclusion. Oil prices will move somewhat lower, but I do expect that we'll see sort of a buy on the dip push coming up forward. Spot gold. Final chart I've got for you. Spot gold, of course, you can see that big red spike up there, all-time high. Since then, coming right back down, pushed back upward, and I don't know that we go too much higher again. I've not put any trades on yet so far this year. Did a little bit going into the end of the year. I'm waiting to see a little more solidification as to what's going to happen with the employment situation, which will drive bond yields, which will drive stocks. So make sure you hit that like and follow button. If you're just finding me for the first time, make sure to hit those buttons down below. Thanks so much for the comments, and be looking forward to more videos, especially the stock market review for Friday. We'll see you then.